Hi, welcome. It's Mary Ellen McGonagle, Senior Managing Director of Equities here at Simpler Trading with your weekly Edge Show. Today, we are going to take a look at the broader markets. We did close below a very critical area of support, and then we'll take a look beyond that at some of the action as far as what is driving current price action and sector rotation that may be shaping up. Viewer question of the week is all about uncovering and potentially trading deeply oversold stocks. So we will get into that. Let's move on and take a look. Where did the markets close for the week? And here we are with the daily chart of the S&P 500. We were down almost 3% for the week, but most important and critical is the fact that today, Friday, we closed below this June low of 3636. That was a very critical area for the markets. Now that we have broken below that, there is evidence that we may fall quite a bit further from here. We can take a look at the momentum indicators on this daily price chart, and you'll see that the RSI, that's that relative strength indicator, is now down below that 30, indicating that it is oversold, but it is also heading downward. We can also look at the stochastics. This is a faster moving momentum indicator, and it is also in negative territory as well. So high cautiousness is advised in the broader markets. But from here, let's go ahead and see how some of these underlying ETFs within the S&P 500, the 11 sectors, and how they performed this week. This is a 2-month daily price chart view, and I've added an RSI, relative strength indicator, sorted these sectors in descending order so that up in this upper quartile are those sectors that are holding in relatively well, certainly compared to areas down here, the lower right quartile, very, very weak. And by that, we can just take a quick look here at utilities, which fell 8.8% this week, and highly unusual given the fact that this group is normally viewed as defensive because of the high yield and the nature of their clients needing their services. But unfortunately, talk of higher interest rates will only increase the cost of capital, which these highly leveraged utility companies have a need for, and hence this significant drop. Very, very big volume. We are entering an oversold position here, very similar to the steep sell-off in the beginning of June. So potential rally, we will get more into that. Another area that has seen really a lot in the way of distribution is real estate. And this is all about REIT stocks, mortgage REITs, and other. And again, talk of a recession is not good for these stocks, nor are higher interest rates. And we can see this very steep decline pushing this real estate sector into a very oversold position with this RSI down below 30. Again, we can take a look at previous sessions on this daily chart of the real estate sector group and see that there has at those times been an ability to bounce from that oversold. We will get into that as we move forward. I'm going to share with you a couple of stocks that are very oversold and what to be on the lookout for the stock to eventually potentially bounce. And also from here, we do want to take a look at some of the areas at the forefront. Energy was the only sector. It was up 2.2%. Every other sector was down. However, despite the rally, the energy group overall is in a downtrend. We can see that your momentum indicators trending downward below that net neutral and negative territory, and just barely energy sector closing above this 200-day simple moving average. So still have work to do before a potential uptrend in that group. From here, we can go ahead and take a look at sub-industry groupings in the broader markets that I find to be really powerful in helping you get your arms around what exactly is taking place. So these are ETFs, again, in descending ascending order and take a look. Volatility up here at the forefront. We did close the week at that 31 after spiking above 35, but it is still elevated, certainly relative to historical precedents. In a normal bull market, volatility index, known as the fear index, usually will reside around that 18 level. So you can see we are quite a bit higher, and of course rising volatility correlates with a declining market. From here, we can take a look at that US dollar. This past week, we did hit a 20-year high on that US dollar. Highly impactful in the sense that certainly it is a negative for the broader markets, and also multinational large companies will see reduced revenue figures because of the strength in the US dollar if they are selling their products overseas. Another area to be noteworthy here is taking a look at gold. With the latter week pullback in the US dollar, we got a little bit of a rally here in gold stocks. Nothing to be overly excited quite yet, but the group was up 1.1%. If we go back historically and we are looking for a potential reversal of this downtrend, we will need to see GLD break above at least these shorter term moving averages, and we want that RSI in positive territory. We can see the MACD did have that black line up through the red, which is the initial step that indicates that this downtrend could be reversing. Let's take a look at some of the weaker areas among these relevant ETFs, and we can see semiconductors remain down in this lower quartile. The group was down another 4.5%. That's relative to the NASDAQ, which was down 2.7%. This is all about reduced growth outlooks, and any kind of talk of recession is not good for these highly cyclical, very economically sensitive stocks, still remaining in a very confirmed downtrend. From here, let's go ahead, and I am going to share with you a couple of stocks that are in the potential beginning stages of reversing from deeply oversold positions. And I did share with you that real estate group that has continually gotten hit of late, and this is a prominent REIT stock. It's Public Storage, PSA is the ticker symbol. So we can take a quick look here, and I talked about oversold. That is when this RSI dips below that 30 level. And at this time, the RSI is potentially heading upward. We had a rally in PSA today where the broader markets were negative. This stock did post a gain. So let's take a look at historical precedents when we saw REIT stocks get pummeled back here in May, and those characteristics, and PSA in particular, the characteristics exhibited when it did have this reversal. First up, you will want to see that black line up through the red with this MACD moving average convergence, divergence, and then also a continuation of that RSI upward. Now, of note as well is the fact that in this period, this PSA did have a rally, but it was very short-lived. It was about a week and a half long. It was not until this late July period when PSA broke above each of these moving averages, 10, 21, and 50-day, coupled with a positive RSI and MACD. This is when PSA really got going. We did experience a double bottom formation. So of those two periods, the odds of a continuation rally would be much stronger should we see the stock break above those moving averages and trend higher from there. Let's take a look at another stock, Oversold, and there are certainly many of them out there, but we're looking today at Weyerhaeuser, WY, and it's another name. It was up 3% today, again, in an otherwise very negative market, and here we are with today's rally after a very significant downtrend. We are going to go back here to this late June into July period after we were coming out of an oversold position at that time, and the way that you could tell that this particular stock could exhibit a further bounce would be, again, that MACD crossover is going to be your first signal. And you can see we're not quite there yet. That is what we will need to see. And then a break above this green 10-day simple moving average. Now, of course, from here, I do want to share with you, in the event we do have an oversold rally or a bounce, what you will want to note as it relates to when it's time to exit the stock. And we'll use the daily chart for that as well. And we simply need only to go back to this rally attempt, which failed. And your first sign is going to be that RSI breaking below that net neutral, in line with this particular stock breaking below this 50-day simple moving average. And you can see we had that negative crossover with the MACD, black line down through the red, foretelling future downside. Over here, we had very similar price action with that RSI turning negative and a negative MACD crossover. So let's move on. I do have one other stock that I can share with you, and it is another REIT stock. This is Digital Realty Trust, DLR. A lot of the same characteristics that we've been going over here, with the RSI in an oversold position below that 30 level. And we can also see that the stock was up actually this week, and it did flatten out here. But again, we are going to need to see that black line up through the red with that MACD crossover. We can go back to the end of February when this particular stock was oversold. And again, what to be on the lookout for, that RSI trending upward and you having that MACD crossover. This is telling you that the downtrend has reversed, and ideally from there you do want to see the RSI at this time head upward, and again be very aware of those negative characteristics signaling that it's time to exit, that RSI turning negative, a break below this 50-day, and your MACD heading into negative territory. And again, that crossover at the end of April was your early signal that further downside was ahead. I'm going to leave it there. Everyone have a fantastic weekend, and I'll look for you again here next week. Hey, Mary Ellen here with Simpler Trading. Thanks for watching the video. If you liked what you saw, go ahead and hit that like button and leave comments below. And if you'd like to be notified to future videos, you can hit that bell icon and subscribe. Don't leave without subscribing to my MEM Edge bi-weekly report. I do have a special trial offer. And for those who'd like to learn about trading live with us, you can go ahead to simplertrading.com to learn more.